All right, good morning, everybody. Today is the 20th of June, 2023, and welcome to our Communities of Practice for Federal Fiscal Grants. Just want to make sure that everybody recognizes that they should be on mute. Double check everybody can see my screen, and somebody let me know if you cannot. And again, we are recording today. So welcome, everybody. We have a big jam-packed agenda, as we always do, for our Federal Fiscal Grants Communities of Practice. And just remember, we want to make sure that we get through a lot of content in this short hour, because we know it's hard for you guys to get away, but we can always go over and make sure that we have taken the time to address any questions along the way. So with that, we're going to get going. Here is our agenda for today. We'll, of course, go through the data acquisition calendar for the What's on Your Radar. We're going to do a quick recap of May. We're going to talk with Kathy Gabi about some CFSGA highlights and reminders. And then Federal Program Highlight of the Month. We are lucky to have Cambria Steffler with us from Child Nutrition to do a community eligibility provision overview for you guys. We're going to do some tips and tricks. We've put together a grant-driven year-end closeout checklist for you guys to preview today. We'll do some professional development specifically on indirect costs for federal grants that I'll talk to you all about. Then we're going to get some great insights from Aaron McCoy with the State School Finance Group. And he's going to talk about the SDE overview side. And then you guys are going to be lucky enough to also hear from Elmira Feather. She's going to talk to us about formulating that plan on the LEA side, how she calculates and uses that within her district. And then we're going to have a little bit of time at the end for discussion, year-end planning, accrual strategies, closeouts, and we'll have a link for you guys if you want to register for a maintenance of effort refresher webinar that we'll be putting on next week. All right, so let's start with the What's on Your Radar. We have had such a busy month here. Very, very, very intense list of things that you guys have been in charge of doing, both on the program side and on the fiscal business manager side. Most of these dates, this just goes through the 15th, but this was a long laundry list of things that you needed to get in, everything from the assessment group, special ed, Indian education, school finance had due dates. If you've missed any of these when you're looking through this and you're like, well, shoot, we forgot to request advanced transportation funding, I better get a hold of Zane. Take a look at these lists and get on the horn and call that person or email them and make sure you reach out as soon as possible to see if there's something you can do. Quick little shout out for myself. We had our preliminary application due last week. If you missed that, we're going to reopen it the last week. I'll probably open it Friday at 5. But this week we have the current year's application open if you guys need to get in and make budget adjustments. Here's a second list of June. We've got lots more dates here. Most of these have passed. So again, if you see something on there, oh shoot, I didn't do the attendance and enrollment data submission, make sure that you call school finance, get a hold of Dean, let him know what happens, see if there's something you can do to make an edit or to still submit. We do have a couple more dates here down at the bottom. There's some stuff coming up due on the 22nd to school finance. Aaron McCoy is your guy, and he's on the call today. So he's got a couple of items on this list that are due to him. And then flipping back to what is due by the end of the month. The biggest one that I know about specifically are all these federal programs dates. We know that the CFSGA application is due on the 30th. There's some other information due to federal programs for Title I neglected delinquent, 21st century learners. Again, more stuff for school finance. So make sure you guys take a look at this list. Special ed has some early childhood outcomes coming up. There's school building demographics, the career ladder stuff that's due to federal programs, McKinney-Vento. You guys have a long laundry list. Do not lose sight of all these due dates. Okay, now we don't have the final dates for July of 2023. This was 22's list for what's coming up in July. It'll probably be similar, but look for that to be coming out shortly from the State Department. We know there's some early child nutrition dates though, so make sure those are on your radar and that you're ready to go for those. And it's not a surprise. All right, so I have a recap of May, and in the slides there'll be links, but they're always posted to the website as well. So So we're going to just recap quickly what happened last month. If you missed it, and there's recordings, of course. We wanted to make sure everybody recognizes that the Uniform Grant Guidance, which covers federal programs, says that if you have a federal program, you have to do time and effort. All employees paid in full or in part with those federal funds have to do that. And really, we're trying to associate that the effort matches how you paid them. That's all time and effort is. And we have the link on the bottom left inside this slideshow that will get you to the specific refresher training we did last month, and then a link to a really more in-depth time and effort training that we'll offer in a future series as well. Now, we also did MAID tips and tricks. It was fantastic last month. We offered a training on introduction to data dashboards. Such a game changer. Could your LEA benefit from this? It's so much nicer, I think, to see pretty charts and to explain it in a picture to folks that are just not used to staring at those wonderful accounting reports that you guys look at all the time. So think about ways to up your game and be able to present this to stakeholders in your communities and your board members, or even your program directors to show them how they're doing in comparison to prior years. Now, we also talked about inventory processes. That's required under the Uniform Grant Guidance, or UGG. I know some people say, ugh, we have to do it. No pun intended. All right, but the Uniform Grant Guidance does require that you have this, even if you don't use the funding source to purchase inventory. You have to have a policy, which you probably have a policy if you have ISBA 7000 series, but you also have to have a process and a procedure in place. So you have to say, here's the inventory template, and our procedure would be that if we used Title I funds to buy blah, 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 that would go on this list. So we have a link to this inventory sheet that is on this SDE page under the federal programs. And then just to give you a preview, if you didn't realize this was in part of last month's training. It's a lot of stuff that you have defined under the requirements if you're using federal funds to buy equipment. Look at this laundry list. So make sure that you double check that. But with that, we want to turn it over to Kathy Gobby with federal programs. She had a couple of things she wanted to talk to you guys about the CFSGA. So Kathy, are you out there?
I am here, Lisa. Thank you very much for inviting us to be a part of this. We're always happy to do that. I do not know whether or not I have the capability to share screen. I'm going to go ahead and try. Oh, it says.
Stop sharing. You should be able to.
Okay. All right. Now I'm going to see, and I'm hoping that I'm going to show you the one that I want to. And so hopefully you're now seeing the CFSGA homepage.
We sure are. Thanks, Kathy.
All right, great. So I told Lisa, rather than doing slides, we would just do a little informal recap here, that you've gotten several emails from several folks here in the federal programs team. And the one I wanted to start with was the tidings waiver. We did just find out, and Brian Butkus passed on to an email to you folks on June 13th, last Tuesday, that we did receive the tidings waiver. And so it includes various programs and gives us an additional year to use those funds. And so for the funds which had original period of performance from 7/1/21 to 9/30/23, those have been extended and now will be expiring 9/30/24. Along with that is the additional 15% carryover limitation waiver, again for all LEAs. And so you may again carry over more than 15% of your funds for your 1A. But if you do that, if you will please put a comment in the comments section that you are conferred with your business manager on that. And then there's also a spot that you are going to request that in the CFSGA. And so under your Title I budget, you would have your carryover. And if you're requesting an excessive carryover waiver, you would complete this. Then we would approve it. If you do not need to carry over more than 15%, please do not fill that out because you don't need a carryover waiver, but we are asking for you to put that in there. And then you could just say, as noted, we are applying because we have that according to the tidings waiver, and then also tell us why. Is it because perhaps you weren't able to hire some staff for your Title I-A program that you thought you might be able to? Please be sure and do that. And just a reminder that we do look at that carryover and all, and if it matches or is very close to your GRA, then we're good with that. And if it's not close, if you're obligating or expending additional funds between now and September 30th, but it's not going to match your GRA, please add a comment under the comment section and tell us that you all have visited and that the business manager and the federal programs manager agrees on that. So that's that piece. So that's number one. Number two is grant reimbursement application requests. You would have just gotten an email from Katie Watkins today, and she and Michelle Pereira and Brian, all of them are on this call right now. But grant reimbursement application requests after June 24th will require supporting documentation for all ESSA and ESSER requests. You're already doing that for your special ed requests. And so that is not new, but we don't want an abundance of documentation. We don't need invoices, those kind of things, but perhaps just a detailed ledger. And again, per funding source, submit it separately. In other words, if it's for 251-1A request, only put your 251-1A on what you're submitting to us. That will really help Michelle out. And same for your ESSER, that assists Katie and Lisa as they're reviewing that, both for GRA requests and then also for monitoring for both ESSA and ESSER. That helps us out. So that's, again, beginning requests with requests made after June 24th of 2023. Then just a reminder that the CFSGA plan, as Lisa mentioned, is due June 30th of this month. If you are intending to be able to have use of funds beginning on July 1. And so we ask for an approvable plan. It does not have to be a perfect plan, but it needs to be approvable. So be very intentional about what you put in there. And we do understand sometimes we have to go back and forth, but try to put as much detail as you can. For example, don't say for Title II-A, well, we're going to either use it for professional development or we're going to use transferability. Please decide to go one direction or the other. You can use transferability for 5A transferability. If so, then you're going to fill that out. And there's a spot in there as well, from what program to what program and the reason for that. And also when you submit your GRA request, if you've used transferability, we need to know that as well. So say, for example, you did use transferability for your 2A, then you would have a 0 down here and wouldn't have a plan. But as long as you have an allocation for any of your programs, you are going to have a plan. So that's a brief overview, just a reminder that these are the programs that are included in the plan. For next school year, we only have 2 LEAs that are going to be using the RLIS part of 5B. That goes through the CFSGA. If you are SRSA, Small Rural Student Achievement Grant through 5B, those go directly through USAID, and you've already done your correspondence and gotten approved on those. So that again is my 1, 2, 3 for federal programs. And we'll ask then if anybody has any questions or not on that. I'm also going to go ahead and stop sharing my screen. And I'm going to put the CFSGA link in the chat so that you have that at your fingertips. So thank you very much.
That's fantastic. Thank you so much, Kathy. And again, if anyone has questions, you can put them in the chat and we will try to make sure that we answer what we can live. And if not, that we make sure we answer them after the fact. So that's CFSGA Highlights with Kathy Gabi. And next up, we are very lucky to have Cambria Steffler with us from the Federal Program Child Nutrition Group. And I'm going to turn it over to Cambria.
Good morning, everybody. Thank you so much for having me this morning. So I am the coordinator at the State Department of Education that oversees CEP. And CEP is the Community Eligibility Provision. And this is a provision that offers a way for qualifying schools to serve free breakfast and lunch to all students. And this program is beneficial for not only your students and parents, but as well as your school staff. One of the really great benefits of this program is it reduces the stigma around free meals, and it allows all students to access free breakfast and lunch. And this helps out families and households financially. And it's also really great for your administration. For schools, you will have less paperwork and your meal service is going to be much more streamlined, and there is no need to track unpaid meal charges, which I know can be challenging for some schools. So schools, let's see, schools that qualify for CEP, they must operate the National School Lunch Program. So that is the one big qualifying factor for CEP. And then the other major factor for CEP is that you have to have an identified student population of 40% or higher. So an identified student is a student that is certified for free meals without the use of an application. So for example, this would be students who qualify for SNAP benefits, their migrant status, they're in foster care, or they have the McKinney-Vento status. And there's a couple other ways that they can also qualify, but those are some of the major ones that will allow them to qualify for the CEP ISP. And next slide. So we do have several resources that are available for the CEP program. The first one that you can see on the screen here, this is our webpage. It's under the Child Nutrition Programs webpage on the SDE's website. And we have a whole section that is dedicated to CEP. And this includes different fact sheets as well as a list of eligible schools and districts. So you can go see how close your individual school or your district is to qualifying for CEP. And we also have some frequently asked questions and important links. The next resource that we would like to refer you to is the USDA website. And this is where you can find a lot of information about different legislation that is out there, as well as a great resource center. One of the important legislation pieces that is out there right now, it's a proposed rule, so it hasn't been put in place yet, but it will potentially allow more schools and districts to be eligible for CEP by decreasing that ISP percentage. So please keep a lookout for that if you are interested in this program. And as well, you can always reach out to me if you have any questions about CEP. You can reach out to me by phone or email, and I'll be happy to answer any questions that you have. And that's it.
Great. Thank you so much, Cambria. We really just appreciate our partners here at the SDE. Anybody operating federal anything, it gets kind of tricky. And she's right. There's a lot of meal debt amounting, as you all know, if you're a business manager. We had that lovely couple of years where everything was covered for free through USDA, but we all know that this year that we're sitting in, it went back to you had to have the lunch applications, and then we all know what happens sometimes. We have debt that just you can't recover, and then you get to cover that yourselves. So if that does work for you, definitely worth taking a look. Now, we have developed a great new resource for you that we will be sharing after this Communities of Practice. And I just have screenshots of it today, but we have put together a year-end closeout checklist for you to make you feel super like the guy in the picture. So we know that grant closing out compliance can get really tricky. So we have put together a nice list to prompt your own further development of internal processes and procedures that are towards year end, but we have some basic LEA information. That this is a nice checklist to show your auditors too for your own policies and procedures. There's a miscellaneous identifying section, but it has really good time and effort, employee matters, inventory, and accounting. So let's dive in and take a look. We have in this checklist links also to information for you guys to remind you that, hey, you got to make sure you get take a look at that checklist, the data acquisition calendar. You're going to make sure that you get your SPED and fiscal CFSGA, other federal programs applications in. All the links will be in there. There's a whole section about time and effort and employee matters. Like, hey, make sure that you redo that final payroll when you're, most of everybody that has somebody paid you in federal grants, you at least have to have that semi-annual certification. So make sure that the second one that you're doing matches up with your ledgers when you guys go to certify that final effort log. Make sure that your PEEF card verifications are done. Make sure you get those final mileage sheets in so you don't have it sitting on someone's desk all summer and they come back and say, oops, in the fall. You want to make sure you get those into the right fiscal year. So make sure that you take a look at that and make sure that you think about what's on this and what you could add in addition to it. Hold on, I'm just admitting somebody. Okay, and then the next section is about inventory management. We'll have lots of resources in here as well. We did a whole training on that last month, and there are lots of pieces, including right here in the middle about Idaho code that makes it so that you're supposed to do this. We want to make sure that you know how to do that, you have resources, and that you have that done every year, because those are some of the most common findings that we give out, is that you don't have any inventory process or procedure. And then the accounting list is long. We tried to put lots of things in here. You might want to rename these. It's going to be in a Word document, but it's going to talk about, hey, did you verify that all of your SPED and federal funds are in the accurate coding? Are you using the right fund and function codes that are assigned in the chart of accounts from school finance? Are you using the right fund? ARPA IDEA had its own fund number. Some of the ESSER funds got their own fund numbers and CARES and all those things. Make sure you have those in the right place, because you have to report them in iFarms as such, and because your auditors are going to be looking for them in those funds. So do yourself a favor, use these checklists, add to them. This is everything like from asking your contractors to submit final billings for the fiscal year, doing your inventory depreciation schedules. I'm going to bump up to the second page, talks about all your final journal entries, which could include indirect that we're going to talk about here in a couple minutes. Making sure that you're meeting maintenance of effort, that you're balancing your Medicaid funds, doing those final accrual drawdowns. Maybe you're just double checking that the payroll, if you guys do that 12-month pay for a 9-month contract, make sure that you're accruing the salaries in the right places. We tried to throw that stuff in here. So make sure that you get excited about this list, share it with each other, and then see if you can add to it. We'll probably reach out to you guys to see how you guys have enhanced it. And now we're going to jump into some indirect costs. So I'm going to talk specifically about federal grant components and what is an indirect versus a direct cost. And the reason we're talking about this is because we had all these new funds, and this might be your last chance to take some indirect on some of the one-time funding, or just to implement it in general for your district. So I have a CFR here that talks about indirect on federal grants. And again, we're always talking about CFRs, those codes of federal regulation, because we're managing federal grants, right? So that applies. So the whole purpose of indirect in general is just to account for and recover costs that are associated with the management of some program, a federal program in this case, but you can't identify it otherwise. What does that mean? Well, really what that means is it direct to the program, or is it on the sidelines in the background being done? So I've got some different points here to help you determine that. So if it's a direct cost, that's something that's identified particularly inside a grant program, like who's the program director or some activity that's being funded for that one program. But the indirect costs, which is the second group here, talks about costs that you have to incur, but is a common joint purpose that benefits more than one program, more objective. So think about that, like HR services, payroll services, business office functions like accounts payable. All those things have to happen so that you guys can run your federal program individually, but that would be considered an indirect cost. And we're going to get more in the weeds on that in a couple slides, but that's the very, very high level overview of how you can do that. And that talks about facilities and administrative costs. Again, those are referred to as F&A, and we'll talk about those in a minute. But let's talk again about that classification. Like, how do I decide? Well, there's no universal rule. That's the important thing for you guys to recognize. There is no one rule. It could be a direct cost with respect to some specific service or function, but it could be indirect with respect to how that federal program works and their cost objectives. So really what's essential is that you guys determine what is going to be treated how internally, but we want to see consistency. And so it's saying that it's essential that each item of cost incurred for the same purpose is again consistently from program to program and fund to fund consistent. So if you can't just charge for business services to one grant and then not the other as a direct cost, you need to just decide, hey, that's all going to be indirect for everybody. That's the easiest way to think about that. We have some examples of administrative or clerical services. Those might be direct costs. Like think about a special ed secretary. You can't probably run your program without her or him. So make sure that if it's something that's very specific and you can put it in the line item of your budget and all of that, that might be a direct cost. But not everything is going to be covered as an indirect. So think about those from program to program. But really, the things that you can charge for indirect are going to be salaries and those other clerical staff, overhead, again, payroll, personnel functions, maintenance and operation of space, like space rent for that group, data processing, accounting, auditing, budgeting, all those pieces can probably go in as overhead. Think about overhead as indirect. That's an easier way for a lot of people to absorb that. And then I've got 2 CFR 200.1 that talks about the rate proposal. And it's a document that's prepared by the non-federal entity, that would be you, the LEA, to substantiate your request to get you guys an indirect cost rate. And Erin's going to talk to you guys more about that in detail. But basically, your indirect cost rate is referring to the percentage of general management, that overhead cost, that a federal grant should bear. So everybody should have to cover a little bit of that because everybody's using payroll, right? So that's where indirect comes in. And then he's going to talk to you about the maximum approved rates and how that works. But basically, indirect costs are only recovered to the extent that the direct cost is incurred. So that's the other piece. You actually have to show expenditures before you apply your indirect rate to it. To give internally. So that's kind of the super high level of it. But basically, we're each going to talk a little bit differently about how that's worked. But once you have that approved indirect cost rate, you're going to multiply that. And Erin and Elmira will get into that. We'll do a more in-depth training that talks about how you apply that to if you have contracts in excess of 25,000, you subtract that first 25,000. But today we're kind of just skimming the top and getting into indirect. There's a lot of you guys that don't use it. So we're trying to take the stigma away from it. What is it? Could it be beneficial? We know some of our other funding sources are being cut, and this might be a small way to help offset some of those things. To support your business office functions, for instance. And once you've applied for that rate, you'll get a notification. And if you have more questions about that, I'm sure they're going to get answered in just a couple minutes by Erin and by Elmira. But for direct grants, this is the final bullet. The reimbursement of indirect costs is subject to the availability of funds and the statutory restrictions that might come within each federal program. So you might hear within a federal program, there's a max fixed rate or a limited rate, and you will be notified of that. Like for instance, Perkins grants have a 5% max. We don't even deal with those here at State Department of Ed, but they would have like a fixed maximum rate of indirect you could take. Even if your approved rate was higher than that, the federal program itself might limit that. All right. So I told you that you're going to get lots more answers. And I am here to present Aaron McCoy to you from our public school finance group. And he's going to give you the insider information on when and how you can apply for that indirect cost rate. Again, ways for you guys internally to possibly recoup some of the costs that it does cost you for all those other things that are not a direct cost within those grant programs. So Aaron, I'm going to turn it over to you.
Okay, thank you, Lisa. I appreciate that. So my name is Aaron McCoy, and I'm with School Finance. I am going to be your primary contact for requesting a rate, and any kind of questions as far as iFarms, how to apply that rate, and just requesting the rate so you can issue it and charge it to your programs. So Lisa did a really good job on covering what indirect cost rate is. I'll cover it at a higher level. She really went into some great detail and provided you some of the federal code sections. But basically, an indirect cost rate allows schools to recover costs that aren't easily identifiable. It allows you to charge it back to your federal programs. So as mentioned, so your payroll expenses, HR, utilities, accounting, business office expenses, those are the expenditures that you can't directly identify and charge back to your program, but you know to run your program, you're incurring certain expenses throughout your school. So that's what the indirect cost rate allows you to do. Just kind of recoup some of those costs. What it does, indirect cost rate does not give you additional dollars to the grant award. Like I said, it provides you funding to recoup some costs that are incurred. So it's really kind of a local decision if you want to charge indirect or not, because you got to keep that in mind. If you want to dedicate 100% of your program dollars to your program, you probably won't want to charge indirect because it does take away from the overall grant award. But if you have a higher level of overhead, it might become valuable to your school to kind of help you recoup some of those costs. And then if you do elect to charge an indirect cost, you must request a rate from the State Department of Education. We have delegated authority through the United States Department of Education to issue rates to LEAs. So if you are going to go ahead and charge indirect cost rate, please make sure you are requesting that rate through our department. So how do you request a rate? Well, each spring I will send out what we call an indirect cost supplemental information form. And what this does is this asks certain fields ask questions about your financial activity for the prior year. We base the rates off of your prior year information submitted through iFarms, which is Idaho Financial Report Management System. This data we collect, and sometimes schools code differently than what what's the appropriate coding for indirect. So this gives you a chance to maybe make some adjustments to how you coded stuff prior year. And that way your indirect cost rates actually reflect your activity. So these are sent to business managers and superintendents. Not required. If you elect not to, you decide you don't want an indirect cost rate, you do not have to submit this back to us. But if you are wanting an indirect cost rate for the current school year, you will need to submit this back to us. And again, if you're part of federal programs and you do find value or have want to get a rate, please make sure you're working through your business managers or your finance department. Since this questionnaire asks questions on the overall accounting of your school, you want to make sure that your business managers or your finance department are completing this form and submitting it back to us.
You ready for the next slide? There we go.
So when you request a rate, there's going to be two rates that we issue to every LA. We have a restricted rate and an unrestricted rate. And depending on your grant, you'll have to make sure what's allowable. If you can, what's the appropriate rate to charge. Restricted rate are used for grants with supplement, not supplant provisions. The calculations generally include costs for accounting, payroll, HR, and then exclude your governing costs, your CEO, CFO, those higher level expenditures for your administration. Now, the unrestricted rate, that's those unallowable expenditures are rolled back in. So your superintendent, your CFO, the higher level business expenses are included in that, and that's how you get your unrestricted rate. Again, we recommend contacting your business manager if you think an indirect cost rate would be valuable, or to see if a rate has already been issued. And this is what the form looks like. So once we get the supplemental form back, we'll go ahead and issue the rate. We send those directly again to the business managers and superintendents. It'll include this spreadsheet you see here and some general instructions on how to apply the rate. It displays the iFarms data that we collected and used to base the rates off of. And then the adjustments and reclassifications, these are those questions we ask. Gives you an opportunity to shift different expenditures that maybe you had coded differently in the prior year into their respective categories. And then gives you your two rates, your unrestricted and restricted rate. And those are the rates you'll want to apply. Now I do get questions, do we have to apply the full amount? You do not. Again, indirect is optional, so you don't have to apply at all. You can apply less if you decide you want it. For this example here, we have 2.5% for restricted. If you elect, we only want to charge 2%, that is okay. You just can't go above the rates that we issue here. So you are allowed to charge less, you just can't charge more than the rates that are issued. The next slide. So allowable costs. So as you apply these, remember when you're applying indirect cost rates, it's to actual expenditures, not to your budget or proposed amount. So you can't just take, if you set your budget and you're going to collect 10%, which you have budgeted for indirect, you can't collect that off the top. You have to apply indirect as you incur expenditures. So for your payroll, supplies, contracted services, general program level expenses, as you incur those is when you would apply indirect, either restricted or unrestricted rate, depending on your program. Some of the unallowable costs that you cannot charge indirect to are your bad debts, fines, capital outlay, debt services, judgments against school, food service expenditures, are some of the excluded costs that you can't charge indirect to. And then some of the suggestion, and I think Elmira will cover this in better detail as far as how you apply it and maybe how to record those in your accounting system. But some of the feedback we got from schools is how they're applying it is you charge directly to the grant fund account. So if it's fund 251, you'd apply to 251 for indirect. And then you do just an internal transfer to your general fund for the amount collected through indirect rate. So you maybe do an end of year transfer quarterly, or maybe even as you charge it directly to your program, you would do that transfer out of your federal fund over to your general fund. So you have those indirect cost dollars now sitting in your general fund. So lastly, we get about kind of a general overview. A third of schools out there, 50 to 60 schools annually do submit the form back and request a rate. Again, it's entirely optional if you want to charge indirect to your program. It's really a local decision if you find value and want to recoup some of those costs. There is not a deadline to request a rate. So you can either request a rate as soon as the school year begins, or as you go through and you're like, hey, we have a lot of overhead, a lot of expenditures. We like to try to recapture some of these additional costs. Go ahead and submit that form back to us. There, like I said, there is no due date. You might see a due date on the data acquisition calendar, but you can submit a request anytime during the school year. And then you're, like I said, you're not required to request one. If you do want one, please do work through our department and to get that rate requested. And if you do request a rate, you're not bound to it. You decide later you don't want to charge it. You don't have to charge it to your program. And then again, lastly, you can always request less than what we issue. You just can't request more than the rate that's issued. So with that, I think it's back to you, Lisa.
Thank you so much, Erin. And Erin really brought up some great points about like how often should we put the indirect on there? Well, what might be a good strategy is if you guys have the approved rate, you know what it's going to be, that you then internalize a budget so that different programs know how much that you will probably the up to amount on the maximum budget allowable that you could charge to their program so they don't overcharge their own program. That way they know, hey, my grant could have $5,000 in indirect taken out of it. I therefore know that I have that much less that I could take. And then two, with that whole process internally, and Elmira will get into this, do we charge it year end? Do we do it monthly? Well, we've seen both ways here at the state. I've seen on IDEA claims coming through the GRA that, hey, I've just batched last month's payroll and everything else under the sun. I've now applied my 2% indirect on top of that, and I'll see a line item for that. It becomes an expenditure to that grant program, and then it adds to the total drawdown of the claim in the GRA, so that the district's reimbursing themselves for that. But then that revenue is like a revenue. It's that internal transfer. You've expended it to the grant program, but then the funding behind it gets transferred over into some other internal account to offset those other business costs for the LEA, so to speak. So there's just lots of different ways to do it. But I'm so grateful that we could have Erin talk to us today about that. Just so we could see his side of it and how you go about that and how exciting you could do it at any time. I didn't even know that. I thought it was once a year. He sends it once a year, but you can apply anytime. But let's get into the LEA approach. And with that, we're going to introduce Elmira Feather, the business manager for CUNA School District number 3. And she's going to share some insights on the LEA side. Why does she do it? How does she do it? What's it going to help offset at the business side? So with that, let's welcome Elmira.
Thank you, Lisa. So following Erin's presentation, I'm going to share an example of what the process looks like on the district side. So, and some of it is going to be repetitive, but I think it doesn't hurt to hear it more than once. So we receive all our federal grants, Title I, Title II, special education, even pandemic relief funds. And for most of you, especially for smaller school districts, our expenses is mostly certified and classified salaries. There could be a little bit of travel, a little bit of PD. And then I'm thinking, what about other expenses? What about our HR department or payroll department? They process our paychecks. What about accounts payable? They pay all the purchase orders and they pay all the bills. I cannot really apply all their expenses directly to this grant because it is not directly related to this grant, but instead I can reach out to Erin from the school finance department and ask him to calculate the percentage that I can apply to my grants. So, and Erin did a good job explaining the process. So once a year, I have to fill out the form and I have to ask for it. So it's not mandatory. So if Erin doesn't hear from me, then he thinks that I'm not going to apply for the indirect cost rate that year. So it's very important for me to remember to do it each spring. Then I receive a letter from Erin. And in that letter, I'll show you an example in a few slides. He gives me an option. He's like, you receive your restricted indirect cost rate and then unrestricted. And unrestricted is usually higher. I wouldn't get too excited about unrestricted indirect cost rate. Most likely you will never use it with the exception of ESSER funds. So, and on that slide, you can see a snapshot from, I took that snapshot from the grant award letter known as GAN. And in that grant award letter, there are terms and conditions. And one of the terms, number 10, says, yes, this is the grant, the only grant where you can apply unrestricted indirect cost rate. The reason I'm emphasizing it, I always use it for auditors because auditors are not used to us applying unrestricted indirect cost rate. So every time when they see unrestricted indirect cost rate, they get nervous. They're like, can you show me evidence that you are okay to do so? So I always keep it handy. So, and with that, I'm ready for the next slide. So, and Erin mentioned that every time when he sends us a letter, he would always either send a link to the guidance or sometimes it's in the email. And I'm not going to go through the guidance, but I always glance over the guidance, kind of scroll down to see that everything looks the same, just to make sure there's nothing new that I need to be aware. But the rule of thumb is it's always the same. Make sure you exclude all the subawards. Do not include any debt service. For child nutrition, make sure you do not include food costs. So the manual actually outlines what can be included and what should be excluded. And with that, I'm ready for the next slide. So this is an example of the letter with the calculation that I received from the state last year. And the next slide is actually going to zoom in and show the percentages. If you can scroll to the next slide. So last year, for the fiscal year 2022, the approved restricted indirect cost rate for our district was 1.81 and unrestricted is 13.66. So as you can see, the difference is significant. And I'm going to share an example of how I apply that percentage to the grant. Ready for the next slide. Yes, so now another thing that I really didn't think about it my first year, and I'm glad I actually double checked. So when the school finance department, they issue that letter, right? They're saying your unrestricted rate is 1.81 and here is, and here your restricted rate is 1.81 and here's another option. But what they're assuming we will only apply it to the federal grant if it is allowed by that particular grant. So they're assuming that we will be paying attention and we'll make sure we can use that percentage to each grant. So I always go to the grant reimbursement application known as GRA, and I pull the grant award letters, and I always make sure that that particular grant allows us to apply the indirect cost rate. In this case, the IDEA Part B, I'm good to go with this grant because, and I already know historically this grant allows us to apply the indirect cost rate. So I'm ready for the next slide. So it looks crowded. And if you're not a business manager, you're probably thinking, what are these numbers? So this is how the actual transaction looks in the accounting system. So we use Skyward, and I do it only once a year. And like Lisa mentioned, she's seen different approaches. Some districts prefer to do it once a month. My preference, I do it only once a year in June. I wait until we're done with all closing entries, accrual payroll, accounts payable. I know all expenses have been charged to the grant, and then I just reserve a day and I calculate all the grants all at once. So it's kind of my internal practice. I know I'm not gonna forget about anything, and I kind of, it's easy to focus for me. So that's my approach. It doesn't mean you have to do it the same way. You can do it monthly. So what I do in this example, I'm only going to talk about IDEA Part B, Fund 257. So it's highlighted in red. And for the prior year, I transferred $18,270 from IDEA Part B grant to my general fund. So, and as you can see, I did it all at once. So if I took the expense and I charge it to my special education funds, $18,000, then my general fund should show exact the same revenue. And this is where you will probably see somewhere in instructions from the state, they always say all transfers should net each other. If you're taking $18,000 from one grant, you have to put it somewhere else. So that's why all my debits and credits, they net to zero. And even if you're using a different accounting system, something other than Skyward, your account numbers look somewhat different, but you probably recognize some project codes and object codes. So they all should look the same. And once again, you don't have to memorize it, but it's kind of, that's the journal entry we pushed into Skyward last June. So this is my way of showing that I took $18,000 from special education and I put it in general fund. And I'm ready for the next slide. Now, something important that I did not realize my first year as a business manager is how to apply that indirect cost rate to the federal award. And if the way I explain it doesn't make any sense, please reach out to Aaron. He's really good at explaining that, because there was a moment where he actually had to put it in the letter for me so I could forward it to my auditors. So let's say last year, all the journal entries are done. I pulled all the expenses that were charged to the Fund 257, and all the expenses, the total of all expenses was $1,027,657. All of my expenses. So I didn't have to worry about any subawards or any debt service, because our special education is mostly certified salaries and resource room paraprofessionals. So just salaries and benefits, very easy. So what I thought my first year, I'm like, okay, all I have to do is just to apply the percentage to this amount, and I'm good to go. So the calculation is slightly different. So the federal guidance are very clear at saying, okay, you have $1 million, 27,657 total expenditures. You cannot charge the percentage to this amount and create an add-on expense. You just have to figure out what is a portion of that amount that can be applied to an indirect cost. So in other words, as you can see highlighted green, I highlighted the formulas, and you really do not need to look at the formula and understand it right now. But the trick is you have to slightly remove the base amount and figure out the indirect cost rate. So all those two green amounts, they add up to $1,027,656. So an overall, hopefully it makes sense. So the rule of thumb, an indirect cost is not an add-on expense to this amount. It's the expense amount that already lives within this amount. So you just have to figure out the breakdown between those. So this is how I calculated $18,000. And I did it for all grants, Title I, Title II, migrant grants, and for the ESSER grant, known as Emergency Relief Grant, I was able to apply 13%. So we definitely took advantage of that opportunity. And with that, I'm ready for the next slide. So, and just a summary, just don't forget, it's not given. You have to apply for the indirect cost rate each year. Make sure you look at your grant award letters, just to make sure you can apply that rate to each grant. And then it has to happen after the fact. You cannot apply that percentage to the actual award amount. You have to make sure the year, or you have to make sure all expenses are already shown in your accounting system, in your and you can see them on your general ledger. And then you can either apply that percentage monthly or once a year. And I will be happy to answer any questions you have.
So much, Elmira, and I really appreciated just your insights from your first year as a business manager. And I think that it does throw people off to do that backwards internal calculations to subtract out what the indirect cost would be, so that you don't therefore add on top of it. But that they're not going to give you a supplemental grant for that. You have to incorporate it into the total grant award amount. So we're going to do a more in-depth training that'll be almost a full hour, probably just on indirect. We'll get in the weeds on how to do those. We'll have lots of Q&A, and that'll be in an upcoming separate training on indirect. But if you have any questions, please do reach out and we can get through that. So with that, we're going to wrap up some of today. We're going to get into a little bit of discussion time, see if you guys have general questions. In the meantime, just to give you guys some fun pictures to look at. We know it's crunch time. It's year-end closeout. We know you start as I'm calculating all calmly over here. And then the middle, you might feel like that. And then at the end, you're finally going to feel satisfied and happy. So we know it's a process, but we're going to pause just for a minute while Israel launches a poll. We have some questions for you guys. If you wouldn't mind answering, we have just a 4 questions for you guys to check off. We're looking at, everything from what are some future discussions and trainings that you're looking at? Do you want more specific in the weeds? We're also trying to see how about the time schedule, because we had half of the people that wanted to come this year couldn't because it was on the wrong day. So we're just kind of generalizing what might you like. So if you guys take a look at that. And then we're also looking at what week of the month. We know the school finance group does theirs, I think, the first week of the month. So we're looking at what week works for you. We don't want it to conflict. We're looking for some space that we can offer these. And then the last question I threw in there came at the request of another district. I'm just trying to put out feelers. How many of you guys have program directors that function as title program and special ed directors? A lot of you guys have to wear 2 hats. And I know we have a lot of staff on here that are business managers, but we have had quite a few staff that are program directors. And if you want to answer as the business manager, because you know the answer, please do. We're just trying to get a feel for that. It'll help us with the content we offer and how we might redesign these communities of practice going forward for future. And I am still getting answers coming in. So I want to thank you guys. Keep answering the poll. We'll keep it open while that's happening. I'm going to change my slide here and keep answering that poll. We had a request to do some special education specific maintenance of effort training and year-end closeout. How do I wrap in my Medicaid year-end stuff? I don't remember, and I just need a refresher. We will talk about that on Wednesday, June 28th at 10 a.m. You can register on this link here. And I'm going to send that out to all business managers and special ed directors. But we'll have it in these slides, and I'm going to try and get these slides out within the next couple days. And if you have other requests, please let us know. Hey, I really would like you to do something else. One of the questions we asked on this poll was timed trainings. Do you want us to try and do a time and effort refresher like I just did last month so that you guys remember how to do it before the year-end closeout? This month is June. We're giving you guys a year-end closeout list that I'm going to send out in Word so you guys can edit it and make it your own. Are those things helpful to you? What other things do you want? Do you want to get really in the weeds on migrant ed and learn all about it and have one dedicated migrant ed training that you can refer to? We're just trying to grasp what it is that would be most helpful to you guys. We know your time is valuable. So we want to make sure that we can provide services to you guys that are most applicable and useful to each of you guys so that you don't attend something that's basic when you're really looking for in the weeds. And I'm getting quite a few responses here. I don't want to close it. I'm going to just keep it open till the end. And I'll just keep bumping the slides forward. We'll always have a list of all of our staff, and we'll be updating that next month. There's been some more changes. Special ed staff, there'll be more changes on that. But we have our contact lists. And we want to thank you always for attending. And want to make sure that you guys just know that we appreciate everybody's time. And does anybody have any other questions? Did we miss anything else in the chat? I just want to make sure before I close today. I don't think so. I'm going to stop sharing my slides, but I want to thank all of our presenters and everybody for attending. Really quick, I will share those results since we have a minute left for everybody to see. We did get quite a few of you guys want some more advanced. A lot of you, most of you guys want at least refresher trainings, but a lot of you want more specifics. So that's very helpful to us. And skill building offerings, those are like, hey, we'd like to know some more Excel or budgeting this or that. So we kind of did a mix this year. And then, yeah, it looks like for the days of the week, everybody likes Tuesday. Well, not everybody, but a good chunk of you, 60-40, it looks like. And then to look at which week, kind of a mix there, but the second week looks pretty good. So maybe we'll be switching to the second week. And we'll make sure it doesn't conflict with any other offerings at the state. And it looks like most of you guys have one separate director for those programs. So thank you guys so much for attending today. Thank you for doing the polls. We know this is your final push, so good luck to y'all. If you have questions at any point, please, please, please give us a shout out. And we will see you next month in July for some more communities of practice. Have a great day and a great week.